Hey guys, welcome to today's session. I'm going to give everybody a moment to join and then we're going to jump straight into things. I have a little bit of a topic that I want to go over today, which I think a lot of people might find interesting. I don't think some of it we've covered it before, some we haven't, and some information I have to omit purely for regulatory reasons, which as I go through today's session, you'll understand. But as I say, I'm going to give everybody a moment to join. And then we're going to get into the thick of it. Okay, welcome guys. Hope everyone's doing well. Silver at new all-time highs as well today. I was in longs earlier, exited those. XAQP, for those who attend these sessions regularly and know me well, XAQP hit a new all-time high today, which is fantastic. I think it's been 2 weeks since previous high, so it's nice to get back up there. Yeah, silver at new all-time highs. I don't usually like holding silver into all-time highs, so I have a breakout strategy that trades silver. And I like how it moves on a breakout. So, for example, this it might have been this area, would have been a trade that I was in. And usually, what we see is when we break on silver, if it commits, it's usually pretty aggressive, right? The problem is into all-time highs, I just don't like that because you get this kind of what we saw last week. I was in this trade, and I also came out of this. I think I exited just above the high. I'm not a fan of trading into all-time highs, so I think I came out of that. There was another one here that just got aggressively beat down. I can't remember which one it is. But yeah, silver, very, very, very aggressive asset. In my opinion, far more aggressive than gold. You can see gold is up 0.52% on the day. Silver is up almost 4% on the day, like saying to all-time highs. $60 per ounce, which is crazy. If we take a look at what was priced a year ago, 12 months. So the silver has basically doubled in price in 2025, which is just nuts. If we highlight the opening price for this year, it's $28.95. So we're over double. What percentage gain is that? I mean, it was 108%. 108% this year. I mean, insane. Absolutely insane. Got these highs over here, which is really nice. How long has it been since we've been above those? Since October. Okay, I mean, that year is just crazy. Way more crazy than gold. Oh, don't know what this is. Yeah, so it's just, it's a bit of a wild asset. It's not my favorite to trade, if I'm honest. I have, how many assets do I strategies do I have on silver? So I've got 2 systems on silver. Both of them are breakout strategies running on the daily time frame. They're both good systems. I think they have a fairly low win rate, both of them. One of them's combined win rate is 47.8%, but the average winning trade is about $80 more than the average loser. So the average loss is $102. The average win is $180. It also has a larger maximum or largest losing trade was $208, and the largest winning trade was $406. So it does have a positive risk to reward on a trade by trade basis. And then the other system, which is slightly better from the strategy metrics that I look at and judge a system by, but that has a lower win rate at 36.94%, so just under 37%. Average loss trade is $82, and average winning trade is $245. So that has a much larger risk to reward on a trade by trade basis. The only difference is, however, I'm also stretching my leg. If you can, I realize that might look quite weird. I'll just put my leg up on my desk because it's a little bit tight at the moment. So I'm going to be stretching that out, stretching that out for the next couple of minutes. The largest loss trade on that system was $386, and the largest winner was $271. And this is what the curve looks like. So it's a better system from the metrics, but I don't like this kind of period, which is one of the reasons why I do intervene on some of these trades. So, for example, silver today, I closed the trade. If I bring it over, see, I closed the position here. So I have missed out on some profit, but I'm pretty happy with that still. I don't know. Maybe when I up the strategies to 50 or so, I'll probably be less inclined to close positions early. But I like to have an element of a hybrid approach to XAQP specifically, where it is all automated, and the majority of trades I do let run to stop or target or till when they close based on the system. However, I do also get involved sometimes. I've been trading for 7 years, so I would like to think that I have a relatively good discretionary scope or feel for the market, especially when I'm not the one who's taking the trade, which is it's quite an insane thing to think about. So when I was trading in a discretionary way, Carlos Paez, thanks for the broadcast. Greetings from Colombia. I appreciate that. Welcome to the session, dude. All the way from Colombia. It's great to have you here. When I was trading with a discretionary approach, which I did for 90% of my career thus far, because a lot of my decision-making power was done on taking a trade, I would make so many decisions. I would end up getting decision-making fatigue or decision fatigue, that by the time I had to, how we doing, Rob? Hope you're all good, my man. By the time I had to decide whether to close a trade, move my stop, run a trade, whatever management questions I had to ask myself, I was already fatigued. Whereas now I don't make a decision until I decide, okay, is this trade something that I'm going to try and run, or is it something that I'm going to cut short? And that helps me make a much clearer decision on a trade by trade basis. Although having said all that, I still leave the majority, I would say 80 or 90% of my positions, I leave to run to stop or target. But nevertheless, last all-time high was 2 weeks ago. I think it was 13 days ago. We hit a new all-time high quote today of 13408, which is fantastic. Going into gold next month, which is just phenomenal. This month started red. For the guys who come to these sessions on a weekly basis, you'll know that I've said for September, October, November, and December, I went into 1% drawdown in literally the first 2 or 3 days of each month. And yeah, I've recovered it every month since. And historically, across all of my testing, across all of my back tests, my Monte Carlo tests, December is generally one of the better months of the year. So I'm hoping to close out December green. There's only been one red December since the beginning of 2018, which is fantastic. So hoping for a strong end to the year, ready for a big 2026 in gold. However, today's session isn't about XAQP. There's a few things that I want to go over. I'm just going to read the comments first, and then we're going to jump into some stuff about the index and some stuff about efficiency. Efficiency is the key theme of things that I want to talk about today, because it's a word that I've become obsessed with recently, inside of trading and outside of trading. Okay, Rob, I've messed up. I've sent you a message. You won't see anything until tomorrow. I'll have a quick read now. I don't think you got anything to worry about. Yeah. What you're asking, yes, you shouldn't do that, and you shouldn't let it happen again in future. But I don't think there's anything to be. I don't think there's anything to be concerned about. That also doesn't look like SPWL unless you put positions on or you trade history on for the day. But I'll respond to you via DM. Just ping me another message, because I've read the messages that you've sent now, so it will go out of my it'll tick off my DMs. As you can see, my DMs are full at the minute. I need to go through them today at some point or tomorrow. So just drop me another message, Rob, and I'll come back to you tomorrow. Carlos says, what do you recommend to increase the multiplier? I currently have it at 0.2 and I'd like to bring it to around 1. Well, first and foremost, you don't have to bring it to 1. Okay. And this is actually going to tie that's a fantastic question, because it's going to tie really nicely into one thing that I want to talk about, which is the theme of efficiency. So as a trader, as a even as a person, but as a trader in this specific example, everything that you do should be centered about improvement. Okay, moving forward, testing more things, building more strategies, just improving generally as a trader. It can go in one of 1,000 different directions. Getting your risk multiplier from 0.2 to 1 is not gonna boost your career at all. Okay, it's not gonna push you forward with Darwinex. It's not gonna make you earn more elsewhere. It's one of those futile tasks that might feel good internally, and you might think, "Oh, this is great. I've got a 1x multiplier now." But it won't make any difference to your Darwin outcome anyway, because your Darwin is risk adjusted. So to get from 0.2 to 1, you're going to have to decrease your position sizing at your MetaTrader or Signal account level. But if you do that, your Darwin's still going to come to the same result anyway. So even if your Darwin goes from a risk multiplier of 0.2 to 1, your Darwin will still come out the same result. Because, for example, to keep things simple, if I'm risking $100 and I'm on a 0.5x risk multiplier, that means that if I risk $100, the Darwin's going to risk 50. Okay, and that's on a 0.5x risk multiplier. Now, if I wanted to get that to a 1x risk multiplier, I'd have to drop my position sizing by about half. So I would risk $50. Now my risk multiplier is going to be 1, but my Darwin's still going to be risking $50. So it was risking $50 when I was on a 0.5x multiplier, because my original size was $100. And then when I've reduced it to $50, I'm now on a 1x multiplier, but my Darwin's still doing the same thing as it was on a 0.5x risk multiplier. Hence why it's a bit of a futile task. And I don't think that you should be focused on that, to be honest. You have 1,001 different things to focus on as a trader. Focus on the things that are going to improve you moving forward, henceforth improving your efficiency as a trader. Darwinex Algo Trader said, that's a lot of allocation. Got 3 Darwins myself. One's in the gold tier and the other 2 are close to the D Silver top 10. One add a volatility clustering filter could help reduce drawdown. Are you talking about XAQP for volatility clustering filter? Not sure if that was kind of directly aimed at me and my multi-strat. Yeah, that's fantastic. 3 Darwins, one's in gold tier, fantastic, great work, and then 2 in Darwinex Silver top 10 or close to the top 10 in Darwinex Silver. Great stuff. Gold tier is I can't say what I would usually say on here. It's a bit of an ego boost, right? Because you know that to get there, you've had to jump so many hurdles and you've had to tick boxes that not many people can tick. So when you get it, it's even for me, somebody who works at Darwinex, like I'm always talking about it, even at work. I messaged Javi this morning, and we were talking about XAQP and gold and stuff. It's such a rewarding thing. I often think that traders are like weird creatures. We think we get rewarded by the money, but 9 times out of 10, what people want is the reassurance that they're actually doing something right, which is going a little bit off topic there, but yeah, and then on my end, if you was asking about the volatility clustering for me to reduce drawdown, I'm not too concerned. Oh, for the silver breakout strat, definitely inflated my ego. Yeah, the silver breakout system, it's one of those that when I did my Q3 review, I went through every strategy that I had. And to answer your question, H. Risto Mavrodiev, I probably butchered that. Do you code your systems yourself? I do and I don't. So I code them, but I code them using block builders. So I don't physically write the code, but I manually put all the systems together. And more recently have been using Strategy Quant to build more strategies, which again is a no-code builder. I can code, but not at the level I need to be top quality. Darwinex Algo Trader, back to the silver breakout thing. It was one of those systems that there was a lot of things that I was trying and I couldn't get anything to work. At least in that testing period. So I generally go through periods of building and testing, and then I run them for a few months live, and then I'll go back and have another week or two solid testing and solid periods of building. And I just couldn't get anything to work for that specific strategy. Now, the metrics of that system are okay. Well, they're actually pretty decent. I think the one that had that nasty loss streak, the profit factor is about 1.73, which is probably one of my better systems when you look at it just from a profit factor perspective, which I don't, but just for the simplicity here. So it is a solid system, but I don't. Every time I tried to implement something different, I was basically breaking it and not getting as good a result. So it's something that I'll definitely come back to, but to be honest, the more systems I get, the more I'll lower the risk across the board on each individual strategy. And the less I have at risk on each system, the more I'm happy to just let them play out for the next 6 months, 12 months, 5 years, 10 years, however long. So yeah, but it's definitely something that I'll take a look at. Tan, how we doing, my friend? Hope you're all good. Rob, won't be any spikes either, will there? Presuming that you mean value at risk spikes, there may be slightly just from a deleverage perspective, but nothing that's going to kill you. So remember, I always say this, the risk engine isn't designed to punish you. So even if you make a mistake, the risk engine is designed to account for that. Hence why we take two averages, your previous 45 days trading average and your previous 6 months trading average. So if you spiral on one trade, it doesn't affect you. For example, in fact, this is a great example. So this is somebody who I taught how to build multi-strat portfolios. He's been lacking a bit recently, so I need to give him a kick up the rear end. When I say lacking, I just mean he's not been putting as much work in. Not that his equity curve is lacking, although it is a little bit, but that's just due to lack of strategies because he's lacking on the input part of things. Now this guy, I helped him build a lot of his systems, and he had one. And this is a story. I don't mind telling it because he's a close friend of mine. It's a story of just oversight and not focusing and just being a little bit, airy-fairy about things. So he'd ran a back test on a strategy that I'd built, and I gave it to him to help get him going. And I think it was that strategy. It could have been another one, but anyway, that's besides the point. And he tested the strategy, and under the risk, he'd put 10%. So he'd put 10% risk per trade, and the back test looked fantastic. Had a max loss of like 1 or 2%, made a few percent over the course of 8 years. Perfect for a multi-strat portfolio. Fantastic, happy days. Now he then set it live, and he also put the 10% risk live. And then the first trade that clicked live, he went into, I think he was down $15,000. And this is specific to you, Rob, so I hope you're listening. He went down about $15,000 in floating loss. I asked him to send me a screenshot of his trade because he messaged me panicking. And his stop loss was about $50,000. Okay, so almost 50% of his D0 account. And I sort of said to him, listen, like, we need to find out what's gone wrong. But at the end of the day, you're now in this trade. You've got two choices. You either cut it here at minus 15K and you just take the hit, or you let it try and recover, which he ended up doing. He let it try and recover for a period of time, which he did. And I think he came out for pretty much exactly break even. However, you will not see on his Darwin chart anywhere where he basically risked, 50% of his account. However, exactly, Rob, if you go into his value at risk, you'll see that it'll happen in real time. He went from a 1.46% value at risk straight up in one trade to almost an 8%. Now, you'll know that I talk about this a lot. You might go, oh, well, he's increased from 1.46 to 8% or 10.2% at the peak. That isn't a 9% increase. That's a how many times? 100%. It's like a 500 or 600% increase in risk. Okay. Because 10% is 10 times the 1%. Okay. So that's 1,000% increase. because he was like 1.5. You know, I'm awful at mental maths, but I would say it's somewhere like a 600% increase in his exposure. And you can see the trade here, pound yen, and it went massively against him. Ended up taking it, I think, pretty much on scratch because the black line is at the top. But then my point is, on his Darwin, you won't see anywhere where that happened. Okay. Now his value at risk has pretty much been damaged short term because of the extreme case of his. However, in your case, Rob, it's not this extreme. Okay. Rob says he's gotta come back, be right back. That's fine. But my point is, even if you make a mistake, you lose double, you lose an extra $100, whatever it may be, don't stress. The risk engine is not there to punish you. So yeah, anyway, story time over. Trader Greg, what do you recommend to have a bigger multiplier on a futures D0 account? How to get it sized up? Okay, so it's not important to have a bigger multiplier. Okay, having a bigger multiplier doesn't mean that you're going to make more money. And I don't know if you was in here when I was answering the question for was it Carlos at the beginning. So the risk multiplier and your value at risk is like a self-balancing mechanism. So if your value at risk is X percentage and your risk multiplier is X percentage, if one goes up, the other one comes down. So if you're risking $100 and you have a 0.5x risk multiplier, and that means your Darwin is going to be risking $50. Okay. But if you want to get your risk multiplier from 0.5x to a 1, you're pretty much going to have to halve your position sizing. So if you halved your sizing, and these are all rough numbers, just FYI, if you halved your sizing from $100 risk on your MetaTrader down to $50 risk, then your risk multiplier would have gone from 0.5x now to 1x. But your Darwin's still going to be risking $50 because 1x of 50 is $50. So regardless of whether you had a 0.5x multiplier or 1x multiplier, your Darwin's still risking $50. So your Darwin is the most optimized, optimized version of what it can be. Okay, so increasing your multiplier does not benefit you in any way, shape, or form. And bringing it full circle back to my word of the day, which is efficiency. Don't get caught chasing a risk multiplier because it's not something that's going to benefit you. If your risk multiplier is low and your value at risk is high, that just means inherently you are higher in risk as a trader. That can be combated if it's a position sizing issue. So if it's just the fact that you risk too much per trade, well, you can change that over a period of time. If it's because you trade with a 2-pip stop and you trade in 100 lots on an asset like gold or the DAX, well, guess what? You're probably higher in risk than somebody who trades with small size, spreads their position over 3 weeks. Do you know what I mean? There's so many factors that go into it. And naturally, some strategies are just higher in risk than others. So yeah, focus on the things that are going to improve you as a trader. Don't focus on the things that is going to serve you no benefit, basically. BT Capital TV, how are we doing, my friend? I am all good, thank you. Would it be possible to take a look at my Darwin's AFXJ and NSOC, please, to get your opinion? Unfortunately, I don't speak English, so I'll watch the replay with subtitles. Thank you. I will do this, but I'll either do it privately or I'll do it on Thursday because there's a couple of things that I wanted to go over I wanted to go over today. I'll take a quick look because it depends how much stuff there is. FXJ and NSOC. Okay, so what I'm going to say is I would rather do this privately, so I can send you a short voice note or video message, but you don't have many trades. So what I'm going to suggest is that we do a proper breakdown in 3 or 4 months when you have 6 months worth of data. On the AFXJ, that should be February next year. So I would say we'll do a proper analysis then. But in the meantime, if you send me a direct message on Twitter or Discord, whichever is easiest for you, I'll give you kind of my preliminary thoughts of where you are, where I think you are at least, and what you should be focusing on moving forward. But at the moment, there's not enough data on here. I'd like to see more trades and more time. yeah, there's only 19 trades on this one, so we need a lot more data. So yeah, okay. I'm just going to check a notification that just come through because I should have really turned them off, to be honest. Okay, nothing important. Sometimes I get when somebody tags us on Twitter, I get it through, and it'll just say like @DarwinX or @DarwinX0, and I'm like, oh god, what's happening? But it was just somebody saying that they use us to verify their record. So BT Capital TV, okay, thank you. It's a pleasure, dude. Just drop me a message and I can get something sorted for you. Okay, so there's two things I wanted to cover today. The first one is I'm going to have to be careful with what I say. There's no suggestions. Of course, capital is at risk and past performance is not indicative of future results at all times throughout this session. There's one thing that a couple of people have asked me to show recently, and that's how to use the Darwinex investor platform. So what I'm going to do is when I invest into XAQP at the beginning of January, I will do that on a stream. If I'm allowed, I'll have to double check. I'm not sure if I'm allowed to, because there's you're not supposed to show live execution of like gambling or trading usually. I think this might be okay. I just want to get it signed off. But you can see I transferred some performance fees across recently. So my performance fees are, and I'll be fully transparent with all of this, as I always am. You know me by now on these live streams. You kind of see everything. So I had 4,002 euros from XAQP. I withdrew 1,930 euros to pay for my IMC qualification and to pay for strategy quant. Okay, so those were a couple of business costs that I have. For those of you that aren't aware, I'm currently doing my IMC certificate, which in the UK is an investment management certificate. I've got a year to complete it, and afterwards I will be referred to as Kieran Duff IMC because you're able to use it at the end of your name. And I will definitely be doing that. You know how some people like always call themselves a doctor? I'm going to be doing that. I'm going to be like Dr. Kieran Duff, but with IMC. I'm going to just call me IMC. Okay, yeah, so that's that anyway. I'm going off on a tangent. And then the second withdrawal was this one, which was 2,072 euros, which I withdrew to my Darwinex Classic wallet, which you can see up here, which is the equivalent of £1,819.80. Now, I have my leverage increased to 3x. So again, capital is at risk, past performance not indicative of future results, but you can increase your leverage from 1 up to 3x. This is based on a few different things, i.e., how much disposable income you have, how much savings you have, your annual salary, your dependents, all of these different things. You have to pass a suitability test to be qualified as an investor at the Darwinex marketplace. The same suitability test you would take when opening a regulated account with any broker, an investment platform, any ISAs that you would look to open. If you're regulated by the FCA as far as the firm goes, then you have to apply a suitability test to all of your clients. Now, there is cases where you might complete the suitability test and they say, or we say, sorry, based on your suitability test results, you're only allowed a leverage of 1x or 2x. This is because we have a duty to protect our consumers and to not let them, lose too much money or risk too much money. Anyway, mine's 3x. So I've passed the suitability assessment to have 3x leverage, which basically means I would be investing, which I'm going to invest into myself. I'm investing into XAQP at 3x leverage, which effectively means even though I'm putting in 1,800, however much it was, 1,800 pounds, that is the equivalent of 5,459 pounds once leveraged up. Now, with that in mind, that means that let's say I'd have invested at the beginning of the track record, the max drawdown I would have experienced on 3x leverage is 3 times 4.33, a 12.99% drawdown with times 3, 101% return. Now, sounds great, but I know, for example, that my max drawdown could hit 8 or 9% over the next few years. If it does, my drawdown is going to be looking like 30%. Hence why we have the the duty to protect our consumers. And if you're even worse, if your drawdown just keeps going and going and going, and you end up losing a load of money, and the curve just keeps dropping, you could basically lose everything that you invest if you're leveraged up by 3 times. So there's of course risks involved in this. The only reason I'm investing with 3x leverage, which I wouldn't do with anybody else, just FYI, just out of personal choice, but because I'm investing in myself, I'm comfortable with the fact that I know who's in control. I know the trades that are being taken. I am in control of closing positions and all that sort of stuff. Rob, I rewatched Makes Sense Man. Why did it act differently for him? Is it because he's traded higher risk and longer? Why did what act differently for him? The value at risk, I know what you mean, but it didn't act differently for him. Is it because he's traded higher risk and longer then? He trades super low risk. It was just that one trade that he put on, which, again, actually going back to that, I didn't explain why. So going back to the story of my friend, I didn't explain why it was such an idiotic error. And I sort of said to him, well, why have you set the strategy to trade with 10% risk? And he said, well, the backtest said it was fine. I said, I get that, but you have put in 10% risk. Your max loss on the backtest was like $100 on each individual trade. Your maximum drawdown period wasn't even 10% of the account. So, but you didn't have 100% strike rate, which meant you took full losers, but you didn't lose 10%. I was like, it doesn't take a rocket scientist to work out that something doesn't add up there. And he was like, yeah, I get what you mean. But that one mistake kind of caused his equity curve to flatline for a period of time whilst his averages work themselves out. But his Darwin survived basically. It didn't kill him off because the risk engine basically just closed so much of his exposure pretty much straight away because it was just way out of scope of his usual risk. Why have I never seen this Darwin before? ZVQ. How have I never seen this? That's pretty slow performance over the past few years. That's probably why. Isn't it mad how, this Darwin, I mean, it's been around for 15 years, almost 14 and a half years. 10%, 16%, 14, 26, 15, 45%, like phenomenal run. And then all of a sudden, it's just like 5 years where, I mean, let's put, what year is this? 2022 aside, because he did 11 or 12%, which is, satisfactory, let's say. But then other than that, the past 1, 2, 3, 4, 5 years just been, pretty abysmal. It's funny, right? Like, you'd probably look at this and go, it's the best trader in the world. And then that is it's such a shame. You have to be constantly improving as a trader. I mean, I'm not saying they're a bad trader at all because they're clearly not. But 5 years period where it's just down only must be crushing, knowing that you are as talented as you are as when you're that trader. But anyway, back to the investment. I will need to double check if I can actually stream that process, purely because I want to show people the process of doing that. And again, I'm fully transparent. You guys will see what's going in. I'm going to probably do it on the first day that XAQP is open to investment, to be honest. I just want to get it done. I'll get it in, get the ball rolling. Hopefully I should get Darwinex Labs investing as well. So hoping for a big start to 2026 where I see some, a steady stream of investment coming in. 11, how we doing? What's the best way to go about adding strategies to existing Darwins in terms of risk and VAR? I have a Darwin with an intraday strategy and I want to add a swing system that trades way less. I wouldn't be too concerned about that. So this is my value at risk here since May. Now, this period, I probably had about 5 to 10 strategies. In July, maybe slightly earlier, maybe end of June, start of July, I started increasing it. And then now I have almost 30. But you can see now I have a 1.16% value at risk. And at the beginning, pretty much I had a 1.33% value at risk. I have 5 or 6 times the strategies, but my value at risk is, pretty steady. So I wouldn't be too concerned about that. I just wouldn't go from adding, having one system to then putting 50 down, all trading with $1,000 risk per trade if they're all trading every single day. Like I know, even though I've got almost 30 systems, not all of them trade every day or every week or every month even. So I'm pretty confident running them all simultaneously. But I would just say if you're questioning it in your head, just implement one per day, per week, per month, until you feel comfortable, and monitor your value at risk curve. It shouldn't see too much of an increase, if I'm being completely honest with you. Like I say, I've got more systems now than I ever have done, yet my value at risk is at the lowest point. I don't include the start because that it's calibrating from your first couple of trades, but from where it was steady here, I'm even lower than that, and that was like 5 to 10 systems. So H Risto, is the strategy quant a block builder, or is it just for building strategies only and not for coding? So strategy quant isn't a block builder. Strategy quant is a strategy generator. So it scans through and builds thousands of strategies in hours. And then you can do robustness testing, Monte Carlo testing, so many different checks within the platform. And then you can export the source code. And then I do further checks on Quant Analyzer and MQL, or MetaTrader 5, I should say. So it's not a block builder. But it's something that you can generate thousands and thousands of strategies in a short space of time. I have been considering setting up a private dedicated server for strategy quant, just so that I can run it 24/7 in the background, just build custom projects and keep running them every single day and just let them do their thing. For that reason, to keep it running 24/7, but also if I run strategy quant on my PC, it does eat up quite a bit of computing power. I think I have 32 gigabyte of RAM, so it's nothing crazy, but it's powerful enough to, I have 4 screens and I do a lot. I stream, what have you. And I do a lot of things like that, but the only time that I experience lag is when I run strategy quant. Whereas if I've been looking at, is it Hetzner or Hertzner? Hetzner, I think it is. Do a server for about £38 a month. And then I would have to pay for Windows, which is probably another £20 or £30 a month. And that's with 64 gig of RAM. So I could literally just put strategy quant on there, because you can move the license to a different PC and just run that 24/7 in the background. I just haven't decided whether to pull the trigger on that yet or not. But I probably will at some point. I'll probably just bite the bullet and get it done. But yeah, okay. Hetzner's pretty good. You can pay somebody to set up the trial version of Windows Server. Okay. I mean, I use FXVM right now, and they have a dedicated server, but it's like 130 something pounds a month. Whereas if you go through Hetzner, you're probably looking at like, I don't even know. Hetzner. So the one I was looking at was this one. So 8 cores, 64 gig RAM, and basically a terabyte in memory. But then with that, so that's €46 per month. Where do you add it? I can't remember where you add it to the thingy. I can't remember where I found it, but it basically costs. I think the Windows cost was for that amount of cores. I think it was $24 or something like that, or €24 perhaps. So these crypto scammers in Discord do my head in. Do you use Darwinex Algo Trader? Do you use Hetzner? I'd be keen to have a conversation if you do, just so that I know, because this is my. I'll load up my. What do you call it? So this is my VPS. It's okay. It's not very powerful. It costs me like $20 a month. And for me, the cost isn't a problem. I just want to know that what I'm paying for is going to be doing the job. I closed down a load of MetaTrader terminals. I think I had about 10 open, and I basically got rid of a load of accounts where I was testing things and decided to run that on my own PC instead because it was just overloading my VPS. You see, flicking between the terminals isn't too long. These are my two FTMO accounts, two 200K FTMO accounts. Then I've got, this is LVFZ. Ah, nice. Euro yen. Hit target earlier. Fantastic. Chef's kiss. Yeah, this is LVFZ. And then I also have XAQP here. However, XAQP to me is my baby, and I want it to have the best structure / setup that I can possibly have for it. So I'm not opposed to paying for more, as in paying a higher fee. I just want to know that, you know, what I'm doing, it's actually worth it. England, United Kingdom. Netcup is another one, using their G11 server to run my MT5 terminals. What RAM do you have on that? Because I also want to run, I'll be running the MT5 terminals, but I also want to run strategy quant on there. And I'll probably dedicate a lot of the processing power of that terminal to run, or sorry, that server to run strategy quant. Netcup. And I'm presuming you have to download and pay for Windows on this server as well, right? Got a $50 a month Hetna server, 64 gigabytes of RAM, and 20-ish cores. Paid somebody $20 on Fiverr to install Windows Server 2022 to avoid the monthly Windows fee. It's worth it. Okay, so you don't have to pay. You can download Windows yourself. That's good to know. For $20 as well. Yeah, I'll probably do that. Yeah, I think it was this one that I was. Is it that one? 6 cores. It's not 6 cores. It's 8 cores. Dedicated. I can't remember. Which one it was. But yeah, something that I'm looking into, because FXVM is great for usability. What do you call it? Not usability. Ease of use. User friendliness, that's the one. But it's I think I need a dedicated server because I want to migrate a lot of what I do onto that server and take it off of my PC. Anyway, back to the investor platform. If you have an account on here on the Darwinex platform, which you can log in with your Darwinex 0 username and password and create your account on here, obviously dependent on where you are in the world. You also have the ability to trade with a demo account, or sorry, invest with a demo account. So you can see that I have an equity of $10,000 in an investor account. I'm going to change my leverage. So I click on these 3 dots here, change max risk. Oh, and I'm going to put this to 30,000. Oh, what is it? 3125. I don't even know what I'm doing. Why don't you let me change that? Oh well, okay. I haven't set it up for the demo account, so I did it on another one. So let's say we wanted to buy ERQ. So we click trade. So I want to put $10,000 into ERQ. I can put it in. In fact, let's do $1,000, because we're all about risk management around here. We can put $1,000 into ERQ. We can do it as a market order, which will buy at the current quote. So the quote of the Darwin. We can put a buy limit, so we can put it when the Darwin comes down to a quote of 200, or we can put a buy stop if the Darwin breaks out of the 350 quote level. For this example, I'm just going to do it as a market order. So we're going to go buy. And then you can see it's done. So we'll go to portfolio. And you can see that I'm now exposed to ERQ. Now, this is only on my demo account. So you can see my equity is still 10,000, but I've got 9,000 available. $1,000 is invested. My closed P&L is nil because I haven't experienced any trades through ERQ yet. The more you add, so if we just go investor dashboard, let's trade PYE, put 1,500 in PYE, market order, go to portfolio. Now we can check on the Darwins. Okay, so PYE is down 0.92 for the day. ERQ is up 0.28 for the day. So I'm now exposed to both of these. $2,500 invested, available 7,500. So it's super simple to do. The reason I'm showing this is, like I say, I'm gonna be doing this hopefully on a live stream when I invest into XAQP at the start of next month. I just need to double check if I can actually do that, because like I say, transparency is key. I'm big on that. That's why that was confusing me. But yeah, I was going to go over this index presentation again. I'm also obsessed with flavored sparkling water at the minute. It's my new thing. So I've just finished one bottle and cracking another. I only usually have one a day, but I mean, there's no sugar in it, but it's probably still. I don't know. Sparkling water bad for you? Do they put any chemicals in it to carbonate it? I don't know. There's probably people that know way more than me about that sort of stuff. But yeah, I don't think I'm going to have time to go through this today. So I think what I'm going to do is go through this tomorrow. I did do a live stream on this when we first released the index to the public, but that live stream was 2 hours long. So what I would like to do is kind of do a refresher session, because there's some things that have changed, like, where is it? Like this, of course. So the index, when I did this presentation, was up 218.71%. It's now up 270% almost. Now, of course, that is a compounded percentage. So it hasn't done 50% since then, but cumulative since the start, that's what the representation would be. It's up 20.49% for year to date 2025. So I need to update this sort of thing, all of these figures. I think we've had all green months thus far since that session that I did. Obviously December is down at the minute, but you know, it's not over till the fat lady sings, as the saying goes. Yeah, there's a couple of other things that I'd like to update. But for example, when I did this, I think there was like 150 Darwins that were included. I appreciate I always forget I'm sharing my screen. I'm just clicking through random slides, so I apologize for that. But yeah, there was like 150 Darwins included, and now we have over 200 Darwins included in the index. So it would be nice to do a bit of a refresher session, and hopefully get the index name out there to many more folk. So I might do that tomorrow, and then on Thursday do a strategy development session. But I'm going to call it an end to today's session, because my daughter is going to be home very soon, and it was her nativity play today. So I want to go and congratulate her, because I couldn't go and see her today because I'm working, but I'm off on Thursday. I can't stream on Thursday. So maybe I'll do the index and strategy development tomorrow. But I'm going to see my daughter at her nativity on Thursday. So I'm keen to hear how today went. And so, yeah, make sure you're always making time for your family. Super important. But anyway, guys, global flows. Thanks, Kieran. Appreciate that, dude. Pleasure. I'm going to call it an end to the session here. Like I say, tomorrow we'll come back, and I'll most likely do this index session tomorrow, and then do some Darwin analysis. So I hope you all have a fantastic rest of your morning, afternoon, or evening, wherever you're watching this from in the world. If you're watching it on a recording, Thank you for stopping by. Thank you for watching. Thank you all for your comments. And Darwinex Algo Trader, it would be great to have a chat with you about Hetzner and Jackson about Netcup as well, because it's something that I'm going to look at doing probably within the next few weeks, maybe starting 2026, setting up a server and getting it all ready for the year. So guys, appreciate you all. Have a fantastic rest of your day, and I will see you tomorrow for tomorrow's stream. Peace out, guys.